What is up, guys, and welcome back to the channel. So today I thought I'd address a common problem that most people have when it comes to trading, which is how can you actually grow a small account into a large one in order to make a decent amount of money from trading. And unlike most of the gurus you see online, I'm not going to be revealing some super secret strategy to flip your account from $100 to $1 million. But what I am going to be showing you is a smart and strategic method that you can use in order to grow your account from a small amount to a large amount sustainably over the long run and make a livable income from trading. So if any of that sounds interesting to you guys, make sure to like and subscribe for more content like this, and let's jump right over to the charts and we'll get straight into it. Okay, so the first step to actually growing a small personal account is to simply have a strategy and an edge that you can follow in the market. So before I go ahead and show you how you can actually implement this to grow your small account, let's walk through the exact strategy which I personally use and that you can also test for yourself to gain consistency in the market. So first step of the strategy which I currently use, if we add this, so step one is to just identify higher time frame structure and direction. Right, so in this case, we're starting off on the 4 hour, and that is going to be the higher time frame. So here we can see that the 4 hour was currently bearish. So very simply marking on the structure, we had this initial change of character right here, which if you guys don't know, a change of character is when price simply breaks structure in the opposite direction to the trend. So if we have an uptrend like this, a change of character would be a break below the most recent higher low, which is a good indication that price is reversing, and then we get a continuation lower. If we're in a downtrend like this, a change of character would be a break above the most recent lower high, again, which is an indication of a trend reversal. So in this case, we can see that this sort of uptrend that we were in came to an end on the 4 hour and price broke 4 hour structure. During NFP the previous week, price rallied, looked like it was going to take the high, but in the end it swept this liquidity and then failed to close any higher. We then had this impulsive move down, once again breaking the main structure. So if we mark that on. So once we've done this, all we're essentially asking ourselves is where can price potentially pull back into for us to potentially look to jump in on these sells and trade in line with that overall higher time frame direction, which we have just identified. And that brings us to step two, which is to go ahead and identify a point of interest for to sell from in this case, or to buy from if we're looking for buys. But all this is a point of interest for this particular strategy, and the one that I'm currently using is simply an area of imbalanced supply or demand, and we need to see some liquidity taken out as well. So what I would do here, I would identify any potential areas of supply that we could see price pull back and react from. So in this case, two stand out to me. We have this area of supply right here. As we can see, this was a single buy candle. Before that, then we had this big sell-off, which did create imbalance as well. We do also have this whole sort of region above, which again, if we get rid of that, you can see it is imbalanced and it does have liquidity below it. But for this particular trade, I was using this area of supply, and I was also using as an extra confluence the fact that we had these highs and also this high to the left inducing that area, which basically means that price stopped just before tapping into this supply. And when it does that, a lot of the times it will come back up, take out that those early sellers below the zone, come into the area of supply, and then you'll see a reaction because the liquidity has been swept. And that's basically the fundamental reasoning behind this strategy, which is that once you see liquidity taken in one direction, you see price head in the opposite direction most of the time. If we look to the left as well, we can see price isn't really reacting from anything. We're just sort of in this random area. So again, we have to ask ourselves, is it likely price is going to reverse here and end this downtrend? Probably not, because it has not taken any higher time frame liquidity and it hasn't reacted from higher time frame demand either. So once price came into this area of supply, like so, that brings us to step 3, which is to go ahead and... So step 3 is simply to go on the lower time frames and identify a shift in market structure. So step 3, I'll just call it the confirmation entry. And I speak about this a lot, and I have done in previous videos as well. But basically, when price comes into our points of interest, we need a reason to get into the trade. We don't just want to blindly enter from every single region we think price may react from. So what we do, in this case, we were using the 5-minute. And what we want to see is the 5-minute uptrend come to an end. So when price is pulling back on the higher time frame, so if we go back here, overall price is bearish, but when it is doing a pullback like this on the lower time frames, that looks like an uptrend. So here we can clearly see the 5-minute is in an uptrend. We have lower lows, lower high, lower low. But once price comes into our area of supply just here, something interesting happens and we actually see price break and close below the most recent low. So if we remember, that's our change of character. And all we're essentially looking for after we see this is a pullback into an area of 5-minute supply, and we set a limit on that zone and we look to sell down to target previous areas. In this case, it was this main trend low. So I have actually played this a bit too far. So if we go back here, so the initial entry happened when price broke this 5-minute low just here, because that was the most recent structure. So once we see this, we obviously don't want to just sell here because, you know, the risk to reward would be terrible. We would have to have a huge stop loss and it would only end up being around a 1-to-1 risk to reward. So the reason why we're waiting for a pullback is essentially just to increase the risk to reward and give us that more a better edge over the market. So better probability edge, because let's say we have a 30% win rate. We're not going to be profitable with a 1-to-1, but we will be profitable with a 1-to-3. So in this case, I had marked on this 5-minute level of supply, and all I was doing at this time was waiting for the limit to be tagged in. So I set a limit there. I was targeting this main trend low, because since price is overall bearish, we are expecting the low to be taken out and for price to continue down. And eventually this trade ended up playing out very nicely, as we can see. So that's the strategy itself. However, I haven't yet showed you how to actually implement this in order to grow a small Forex account, because if we're only trading this normally, like with a 1% risk, for example, you're not going to be able to grow let's say a £1,000 account into hundreds of thousands by just risking 1%. It's just not going to happen. Even if you do it for like 20, 30 years, you know, very unlikely that's going to happen if you're only risking 1%. So if we head over to the PowerPoint now, and I'll show you exactly the logic behind flipping this account and how you can do it in such a way that you don't have to risk the whole account on every single trade. Alright guys, so now that we have that strategy in place, how do we actually use this to our advantage to grow a small Forex account if we don't have, you know, 5-6 figures of our own capital to invest into a live account? And very simply, the first step is just to gain consistency in the market. And bear with me if you think this is just not going to work for you and it's pretty useless information. Let me explain this. So gaining consistency, first of all, is one of the most important steps in order to flip our account. So let's say we have $1,000 or £1,000 in a live account. What we want to do first of all is connect it to MyFXBook so you can track your performance. So let me show you guys my one. So this was an account I was trading between August 2022 and midway through last year. Again, this was risking 1% per trade. But essentially what you want to do is have this sort of metric so that you can track all of your statistics and know that your edge is playing out over a large sample of trades. So I think in this case, this was around 50 trades. So I had a decent sample size of trades showing that I clearly had a profitable strategy. And as we can see over that just under 1 year period, we made 33.9%. Again, this is risking 1% per trade. And it was not such a small account, but in this case, just imagine we had £1,000 in this account. And yeah, so you guys can basically connect your account to my FX book completely free. And this is just going to enable you to track pretty much every single stat that you could possibly need to know. Here we have the monthly percentage gains. You have other useful statistics here as well. And pretty much anything you could need to know about the strategy is tracked by this algorithm. So highly recommend connecting your account to my FX book. And so now how we're actually going to gain consistency is with our £1,000 or $1,000 account, whichever it may be, we're going to risk only $10 or £10 per trade. Obviously, you're not going to make any, decent money from this account. Even if you make 10%, that's only £100. However, at this point in time, the purpose of this account is not actually to make money. You may think that sounds a bit strange because the purpose of trading is to make money, but bear with me while I explain this. So the purpose of this account isn't to make money. It's simply to practice the skill of trading, because once we have the skill of trading, we can simply go and apply it in other avenues and use it to make a large amount of money, which I'm going to get into in the second step in a moment. So I would recommend at least having 6 months of data on my FX book. And realistically, you need to be doing a minimum of 1% per month. Otherwise, you don't really have an edge in the market and you need to go back to the drawing board, adjust the edge slightly, or back test a new one. And then after this, we can move on to the next step. Notice, by the way, that I said 1% per month, because that is a very decent return. That's 12% per year, and that is above the average return of the S&P 500, which as investors and traders we want to be using as that sort of benchmark indicator. So if you can even do 1 to 2% per month on this live personal account tracked by my FX book, so you can't basically cheat, you are basically in a very good position to start to flip that account. But again, we're not flipping it in the traditional sense of making a 1000% return, risking the whole account. We're doing it in the sense that we're doing it in a more sustainable way, which brings me over to the final step, which is actually just to get funded. So like I said before, if you have 100 or £1,000 in an account, even if you make a 100% gain, that's only £1,000, which obviously is not a livable amount, especially as well 100%. That is a very big return. You could expect that over 10 years even of sustainable practices in trading. So there's literally 0 point in trading this small account. The best thing to do, in my opinion, is simply to withdraw the whole amount once you have, like I said, the skill of making 1 to 2% per month. Once you have that, take the amount out of the account, invest it into a 100k funding account. And because now you have that skill of trading, passing this should no longer be an issue. So yeah, the 100k challenge costs around $500. I would just withdraw that from the account and use it to buy this 100k challenge. And this is exactly how we go about flipping the account, because let's say we pass that challenge. We've only invested $500. Now, if we make, let's say, 2% on that 100K challenge, that's $2,000. So we've essentially flipped $500 into 2,500, which is a 600%, sorry, a 400% gain. What are the chances of you doing that on your original $1,000 account, risking 1%? Very, very unlikely. So essentially what we've done is we've bypassed that whole process of trying to flip the small account into a large one, and we've just gone to get funded, and this has allowed us to make that large amount of money from a small amount of money, just simply from leveraging larger amounts of capital. And we don't want to discard the personal account altogether. What we want to do is, now that we have that funding, we want to use any profit splits to either increase our funding, but also to add any of the profit splits to our personal account, so that is building up very nicely alongside our funding. And we're going to continue to do 1% risk on the personal account, and I would increase this in increments. So let's say you go from 1,000 to 2,000 in the personal account. I would only increase the risk from £10 to £20. Once you cross that £2,000 mark, between 1,000 and 2,000, I would just keep it at £10 until you cross that 2,000, and then you can increase it again to 20. And then when you get to 3,000, increase it to 30, and so on and so forth. And yeah, I just wanted to add a quick reminder at the end that a 10% gain, which is a good annual return, despite what anyone says, on your personal account, this would only be £100, but if you do that on a funded account, it would be $8,000 after the profit split. So, you know, you can invest 500 into a challenge and make multiple thousand per trade, or you can invest it into a personal account where you're only going to be making, you know, £10-20 per trade. It's kind of common sense which one you would go for there. With the caveat though that you do have the skill of trading, and that you can consistently make these 1 to 2% gains per month. And yeah, this is essentially how you flip your £1,000 account into a bigger amount without using any of these super secret strategies or unsustainable risk management practices, like risking the whole account on any particular trade. So yeah, that's all I wanted to go through in this video. And that is how I would grow a small Forex account in 2024. No risky account flips, no secret strategy, none of this rubbish, just consistency and applying the skill set of trading over a long period of time. Do this and I guarantee you will grow that small account, whether it be through prop firms or just compounding your own life capital. But anyway, thank you guys for watching. If you did manage to enjoy this video, make sure to like the video, comment below for future videos that you'd like to see, and I will see you in the next one.